Okay, well, I wanted to thank everyone who joined us for our interview with David Aulicino regarding reverse mortgages. And I have to say that I think reverse mortgages are one of the most misunderstood products out there, especially for the real estate world. And I remember back in the day just hearing people say, oh, I don't want to do a reverse mortgage because then it means I don't own my home. And so our broker had introduced us to David Aulicino, and I remember when he first, and this was probably, David, how long ago? Like 5 or 6 years ago? Yeah.
About that, yeah.
Yeah, it was a while ago. And so I remember they were talking about, yeah, you can even help your clients do a reverse mortgage purchase where they can buy another home and they don't pay a dime. And I'm like, okay, that sounds way too complicated. I'm not going to even attempt that. And I actually helped a client do that this past year. So that was my first time. So that was really pretty exciting. So David, please share some information about your background, your experience, and how long you've been doing reverse mortgages.
Sure. Thank you, Sharyn, and thank you everyone who joined. My name is David Aulicino, and I've been in mortgage banking for about 26 years now, and started out doing regular mortgages, and then I kind of morphed into doing renovation and construction lending. And I was at Wells Fargo Mortgage for almost 10 years. And I've been doing reverse mortgages exclusively now for about 17 years.
Wow.
And it was at Wells Fargo that I heard of reverse, but I didn't understand the mechanics of it, about how it worked. And, good and bad, how does this thing work? And once it was explained to me, I recommended it for my own mother-in-law. And it helped her greatly in retirement. I can share that story later.
Okay, so can you please tell me what a reverse mortgage is and how it actually works?
Sure. A reverse mortgage simply is a mortgage where payments are optional. And people have a hard time getting their mind around that. Saying, what do you mean optional? Right. Well, it's just a mortgage, and you'll hear it's for people 62 and over. We actually have a jumbo product where the qualifying age starts at 60. And why that is mathematically is because it's based on life expectancy, right? So 62, the presumption is that the homeowner is going to live about 30-ish years, plus or minus, right? Then they pass away, and then the loan balance needs to be repaid. So some smart people way back in the early 60s, actually 1960s, kind of came up with this idea back in the East Coast. And they had some of their bank depositors where perhaps a spouse passes away, the home is free and clear, and yet the remaining spouse was struggling to get by. And these bankers kind of came up with this idea, well, why don't we lend this person some money and interest will just accumulate on the books, right? And we'll eventually collect from the estate, the person's this age, we think they're going to live X number of years, so the house is still worth a lot, the bank will be fine, right? We're actually lending them money. It's not free money because interest is accumulating and compounding on the debt, but they still have the lender is secure because there's still plenty of equity in the house. And yet the house is still the borrowers, the house still goes to the heirs.
Okay.
So, the basic concept of a reverse is that the homeowner still owns the home. It's just that they're borrowing money. It's just legally, it's just a cash out refinance where payments are optional. There's no prepayment penalty. They can make payments on a reverse if they want to. They're still required to pay their property taxes and homeowners insurance, and the house still goes to their heirs. It just, maybe my mother-in-law's story will help, help people understand it. She was still working, and I was at Wells Fargo, and once I understood the product, I called her up and I said, hey, Mom, I think this might be a better loan option for you. We could replace your normal mortgage that mandates a payment every 30 days with this reverse where payments are optional, basically. You're not required to. in her case, the mortgage payment was just $775 a month, and she was getting by. But when I explained that, yeah, it's still your house. Yes, the debt's going to rise instead of going down, but it means that you no longer have to make this $775 payment every month. So it's just giving you a boost in your disposable income. And my wife has 3 brother-in-laws, and when I reviewed it with the whole family, and one of my brother-in-laws is a finance manager in an auto dealership, and he was crunching the, he goes, oh, I get it, okay. We kind of presume the home is going to trickle up in value over time, like real estate typically does, it goes through up and down cycles, but we know the debt's going to climb on a reverse. So in most circumstances, the future value of the home will be greater than the debt that has to be paid off in most circumstances.
Right.
But if it's not, if it is upside down, meaning if the debt is greater than the value of the property, nobody gets hurt. The government mortgage insurance actually will pay the lender. The estate has no financial responsibility to pay any excess if it happens to be upside down. So the heirs can win, but they can't lose, right? But it means the parent, like my mother-in-law, she had hers for 13 years where she did not have a mortgage payment, plus she got $40,000 in extra cash through her reverse mortgage. So when I added it up, it was like $162,000 in change of improved cash flow that she enjoyed for those 13 years. And when she passed, we sold the house. Actually, I called up your broker, who I've known for, about 30 years now. And I said, hey, my mother-in-law passed. We just need to sell. We're going to fix her house up for a couple months. And then we just sold it through normal channels. Right. And they listed it with MLS. And we just paid off the reverse through escrow. And there was still equity for the heirs. It is just a loan. It's no different, except it's a loan that doesn't mandate a monthly payment. So for my mother-in-law, I often describe it as a quality of life loan for people that, hey, you've got this asset, it has a lot of equity built into it. Here's now, you're able to get off that treadmill of having to make that payment every 30 days. But if you come into money, or if you have the ability to make payments, you can pay the debt down or pay it off anytime you wish. There's no prepayment penalty. So once people kind of understand the mechanics of it, then suddenly the gears start turning. They're like, wow, this is a powerful program. And then they start, and rich or poor, we're getting more and more high value clients come to us. We're doing $13 to $15 million property in Brentwood right now.
Holy crap! Seriously?
Seriously,
that's a lot.
We just did a $12 million deal in Laguna. These are these aren't wealthy. These are relative by some standards. Very wealthy people. And yet I think
by most standards.
Yeah, by most standards. Okay, I get it. But then they get referred to us, and they say, "Hey, they've got so much dormant equity, and we can unlock it, and then they can do what they wish." What they want with the extra funds, or just live more comfortably in their own home.
I like how you termed it, a quality of life loan. That's brilliant. So I was talking with someone today because I was telling him, hey, join us for this reverse mortgage discussion, and he's like, well, how's it different than like from a HELOC?
Well, a HELOC, from a bank requires a payment every 30 days. Right?
Okay.
And so even a regular HELOC is typically even interest only. So, this is a great question because we're often asked this, right? So, okay, because you can get HELOCs from a bank or a credit union practically for free, right? And they're typically a 10-year draw period, and then they go into a fully amortized repayment period. Fine, and very little startup cost. The beauty of a reverse, and typically banks, you need a certain minimum FICO score and a certain income to qualify, and they limit you how much of a HELOC they'll get you. I get it.
Okay.
And with a reverse, if you can do a reverse line of credit like a HELOC because you can use money, pay it back, use money again, pay it back on a reverse. You can work it like a HELOC, except you're not limited to a certain draw period and then a repayment. I mean, you
Okay.
could do a reverse line of credit and virtually live there the rest of your life and use money, pay it back, use money again, pay it back. And the reverse line of credit actually grows. So great question, because pros and cons, because the startup costs on a reverse can be higher than a HELOC.
And then I think the biggest misconception about reverse mortgages is that people think they don't own their home anymore. And that's definitely not the case, right?
It is not the case. Legally, it is no different than any other mortgage out there. You are still the owner of record. We are just a lien holder, just like if you go get a vanilla 30-year fixed from any lender, where the bank is just a lien holder, and we sell those too. You know, our company does normal mortgages, but we are AAG. We're the largest reverse lender in the country. If you've seen our Tom Selleck commercials, you know, to see, get an idea of who we are. He's been very good for us. He's a very nice man.
He's got a great voice,
and he loves what we do. In fact,
Fantastic.
You should come here to our office in Covina, because we've got Tom commercials playing on a loop. But you know, it very common misconception. People, and sometimes the children may call up and they think, you know, what are you selling my parents? And we say, well, please understand what it is. It is just a mortgage where payments are optional. You know, we send you monthly statements. The difference is there's no payment stub or envelope for you to send money back. So the homeowner is required, like any homeowner, to pay their property taxes and homeowners insurance and reasonably maintain the property, right? Just like any homeowner, right? And as long as you do that, and you know, an occupancy is required with the reverse. So as long as they just continue to live in the property, we're not going to bother them. They get an occupancy letter once a year from customer service that they just sign in return that says, yes, this is still my primary residence. Okay. Yeah. But the homeowner, they don't have to stay in that house forever, right? If I do a reverse, it means I have to live here forever. No, you could, well, Sharyn, your client that, you know, we just helped out, who actually signed docs this morning. She's so reverse happy. Mortgage. I know. She had a reverse on another property in Riverside. Okay, she had a reverse mortgage with our company for several years. And through different circumstances, she decided to sell. Sharyn helped her sell that. And she downsized, and she bought another house, and she got a normal mortgage at first on that. And then we came behind it and did a reverse to pay off that mortgage. In fact, she texted me, and I didn't ask her to. I just got so sweet. She just let's see. She said, hi David, just to let you know, now I can feel the house is truly mine because of the reverse mortgage getting approved, because on my income, I couldn't continue to pay the mortgage company. She was just, you know, it was a big payment. You know, it was a big payment for her. She was getting by, but now actually it was almost $1,700 payment on this mortgage that is going away now. Yeah. And whew, I mean, she's basically getting a $1,700 lift in her monthly income. So her and her girlfriend can go play and just enjoy life a little more.
Well, and I think that's one thing that makes me really sad is when you have these people who've been in their home for, you know, 20, 30, 40, 50 years, they own it free and clear. They don't owe anything on it, yet they're just struggling financially to pay their bills or just for everyday living and stuff like that. So this product is perfect for them, because then they can utilize that equity that they've paid off, you know, 10, 20, 30 years ago, and then take money out and then live more comfortably, go travel, have fun, and, you know, go spend time with family and friends.
So, you know, it's a wonderful feeling for people to, wow, you go from having to make a mortgage payment to not, or just.
Yeah, very good. Well, David, thank you so much for joining us. I want to thank all the viewers for tuning in and just getting more information about this. It was a lot of fun. And thank you so much, David, for joining us and sharing your information with us.
My genuine pleasure, Sharyn. Anytime. Thank you, everyone.
Bye,
if you
everybody.
have more questions, give me a call. Take care. Bye-bye.
Bye.